C-Suite EDGE podcast. I'm your host, John Light. I'm also the president, CEO, founder, and probably chief cook and bottle washer, if I can say it that way, of Sabretooth Recruiting. I'm really excited today to have Luke Anderson with me. Now, Luke Anderson deals with, I guess the best way to put this, he's a fiduciary who helps high net worth individuals, family offices, business owners, and executives find out what's the right thing to do with their money and their wealth and what they've earned. Luke, thanks so much for joining us today.
Absolutely. Thanks so much for having me.
Yeah, well, I know, Luke, you've got an interesting story. We were talking about it a little bit in pre-show. I think you've got an interesting journey going on out there, especially for someone who didn't like the normal storybooks and literature growing up. So maybe you could explain that a little bit, give us a little 90-second intro about who you are, where you've come from, and what you do now there at Steel Peak Wealth.
Absolutely. So, yeah, it is interesting. As you mentioned, I was never interested in storybooks. I was always interested in how money worked. How can someone make money without working? As when I was very young, I was just curious of what are the different investment options out there? What are the capabilities? And I really am in the mindset of being able to help others. There's a couple different routes that I could have gone. I could have been stuck in the corporate office calculating numbers for a corporation. And then the other side of it, okay, can I take this knowledge and help clients, help families and their legacy and going forward? And so that is really what separated that between, the two choices that I had. But I was fortunate enough going into high school, going into college, I knew exactly what I wanted to do, as opposed to running around with my head cut off trying to figure out what I wanted to do. So it really has so it really has been a blessing that way. But I initially started with Edward Jones out in Colorado, did training out in Arizona, and then was down in San Diego. So I was down there for 4 years. Now, then transitioned to TD Ameritrade down in San Diego, and then got engaged. My wife is an actor, so San Diego is not the place to be for actors.
Oh, no.
So move up to LA, joined Steel Peak Wealth. We're an independent RIA firm, as you mentioned, fiduciary. So we do help with high net worth clients. I'm the senior vice president and wealth advisor here. And the way that we're able to help clients is quite a bit different as opposed to many larger firms out there, the wirehouse firms. So again, we're fiduciaries, have the legal responsibility to act in their best interest. And fortunately, the way that we're structured is our investment committee then is able to look at, okay, what is the trajectory of the industry? Where are the investment opportunities for clients? What is the way to take advantage of these technological advances and take that and make it as easy as possible and help clients in other ways of which they wouldn't necessarily be able to do anywhere else. So definitely feel fortunate to be able to do so. But there's, just as an example, again, this is just based on what we're looking at here.
Right.
But there is now an opportunity for the sports and private sports side. And the way that it's set up is our clients now are able to invest in sports franchisees.
No kidding.
They're able to invest in the real estate around the stadiums, able to invest in the sports technology. So, looking at Whoop or Apple Watch, right? So there are many sports technological advances coming up and phenomenal investment opportunities. But as well, the way that we look at an overall allocation for a client's investment portfolio is, number one, we want to make sure that it's diversified. So it's not just the stock and a bond, although we implement those strategies, but we want to look at the full picture and say, okay, if we were to invest in stock bonds, okay, is there another element? And that's the alternative investment piece and private side to decrease the overall market volatility in the client's portfolio as well. So there's a lot of things that come into play with that.
Would you look at what you do? I mean, you're a fiduciary, and let's put this out there, that the vast majority of people who are brokers or claim to be advisors or wealth management people, 80-90% of the market are really working for brokers, and there's the potential for conflict. Whereas a fiduciary, in theory anyway, you do well when your clients do well, and that's you've got a legal obligation. And having gone through earlier in my career, I'm a recovering accountant, sitting for the CPA exam and going through all the ethical considerations that relate to being a licensed CPA. You kind of sit back and realize that you almost have to take yourself out of the equation. It's about doing what's right for your client, regardless of what. And so people should be aware of that, number one. That's the minority of the marketplace when it comes to money management, wealth management. Is my
absolutely. Yeah.
But you bring up something very interesting, and I want to ask you a little bit about the current state of where your industry is, your sector is, and your client base resides as well relative to this. But where are things going future state? You brought up alternative investments. I've heard my entire life, you got to balance your portfolio, you got to do all this other stuff. But then you have a lot of people who say, oh, no, you need to be in real estate. You need to have houses and multifamily units and car washes and whatnot. And other people who say, well, you need to make sure that you get in commodities and so on and so forth. But when you start talking alternative investments and you look at the current state of the marketplace now and where it's going, you also brought up sports-related investments. Tell us a little bit more, in just a minute or two, kind of just boil it down. What are you indicating, and how is that a solution for your clients?
Yeah, that's a great question. So there's a few things that I want to bring up. The expectation for, say, the next 10 years is not the expectation of what we've seen for the past 40 years in the overall markets. Okay. Although that does not mean, don't invest in stocks. Again, we've seen that historically done very well. But something to consider is if these overall total returns are mitigated, so it's not as high for the next 10 years, and that, again, is a very high potential just based on overall market valuations, what can be done and how can a portfolio be structured in a way where it protects against that? If we are solely reliant on market appreciation, and many of our clients are in their older ages, well, they can't wait 4 or 5 years for to get some sort of a return like that. And so there are a few strategies of which we implement, and it takes a lot of work on our end, and it can be very complicated, but we do implement options along with investing in regular traditional stocks. Now, the way we do that is, first and foremost, one of them called covered calls, where we sell options. Now, the reason why we do that, it's kind of, as you mentioned, it's kind of like real estate, because we believe in long-term for the appreciation of these stocks. But again, we have no control over that appreciation. When we sell these options, we are generating that monthly cash flow and consistent basis where we're not just solely reliant on appreciation. If it doesn't happen, it's fine because we have this option yield. So the reason why we implement this strategy, and again, it's done on a monthly basis, so it's a lot of work, but the reason why we do it is to decrease the risk, but also increase the consistency and the yield in the portfolio.
Got it.
So as you mentioned, should you invest in real estate? Should you invest in bonds? Should you invest in stocks? The answer is yes. But
that's like me and a buffet, just so you would know.
But it really does come down to what does the client need to achieve? What are they looking to accomplish? Number one, with the alternative investments, as mentioned with the sports investments, that is much more of the illiquidity side of an investment. So meaning stock or bond, you can sell or buy those anytime during the day. You can have access to those funds, right? Now, with an alternative investment, that's a little bit different. That, it could take some of our alternative investments that we have access to. It could be a year lockup period where, the sports, it could be a little bit longer for that liquidity purpose of it. But again, it's based on not being correlated to the stock or bond market. As we saw in 2022, the bond market dropped by 15% as well.
Yeah, so precipitous, yeah.
And it was usually you structure a portfolio in a way where you have stocks, bonds, and then they kind of, go inverse of each other. Mm-hmm. That's supposed to happen, but that didn't happen.
That didn't happen. Yeah.
But that didn't happen. Yeah. So how do we prepare ourselves and help our clients in a way to mitigate their risk as much as possible? And those are the multiple strategies that we put together.
Yeah, and I've always had a philosophy when if you're going to invest in anything, protect your principal. Don't ever go backward. It doesn't matter if your gain is 100% or 0.1%. Don't lose. Sometimes mitigating the potential for loss, I think, is a win in and of itself. Minimizing
absolutely
any loss.
Mm-hmm.
What would you say, with all that in mind, and looking at what you do for your clients, would you say that's the biggest problem you solve, getting their portfolios structured and executed in such a way that it really speaks to their goals and their needs at wherever they are in life? Or is there something else that would be the biggest singular thing that you knock out of the park for people?
Yeah, great question. So there's a couple things. I would say most importantly, the way and ideology of our investment management is actually focused on cash flow.
Interesting. Okay.
It's focused on income. Mm-hmm. The reason being is, yes, we can focus on growth. We can focus on what those capabilities are out there. But the way that we're structuring our option strategies, number one, when we're selling those options, that income is being generated, whether that's being selling a call or selling a put. A put's a little bit different. I'm not here to confuse a bunch of listeners on what that is entails. But when we're selling these options, we're generating cash flow. Mm-hmm. Okay. Now, thirdly, we also, with the alternative investments, we're generating that cash flow with some of those alternative investments as well.
Yeah.
So when we look at those alternative investments, we have access to private debt strategies. Private debt actually has been booming pretty substantially in the last couple of years because there is a higher yield to take advantage of because it's private lending, asset-based lending, mm-hmm. mezzanine financing, right? It has to do with private, so it kind of is a replacement / complement to bonds. So instead of being just stuck with the bond and you have the coupon yield, we're able to supplement that with the private debt, private credit strategies. And so if you were to go directly to these companies, it's $10 million to go directly to these companies. We've already hit those minimums, so our mm-hmm. clients are able to invest in much lower dollar amount. But that is a way to supplement the portfolio as well.
Almost a
syndication
scenario.
Exactly. So there's the traditional ways of generating income. So owning a stock, receiving the dividend, right, being a shareholder, or a bond, receiving the coupon, right? We have those traditional investment abilities, and we do for clients, but then we kind of soup it up. We soup it up in a way with those other strategies to help with income. The reason it really comes down to, why do people invest in the first place? Mm-hmm. Do you just want to grow it to the very max and then die and not use any of that?
I was about to say
any of that money.
You got to be able to do something with it, I mean.
Well, right.
Line your coffin.
Right, right. There has to be some sort of a benefit, or else why would you be doing it in the first place?
Yeah.
And the reason we structure our strategies in that way of generating that income is then our clients are able to make those distributions from the income without touching the principal. We're increasing that income pretty substantially, and then they're able to use that and live their life how they want to be living, right? Go travel, go, be free to do what you wanted to be doing your whole life.
Yeah.
You can go do it. There's just a way of structuring the portfolio and building out a financial plan of which the clients understand, okay, this is what it looks like. Okay, I don't need to be that aggressive because I'm already going to be hitting my goals. Okay, let's just increase the cash flow here and then structure it in that way. So look at short-term, long-term goals and in that sense. But I hope that answered your question.
Yeah, and then some, because I think it's a very involved conversation because it's a very personal set of decisions. It's going to vary from individual to individual, family to family. So with that in mind, let me ask you this. Maybe this is the most important question of the whole podcast, really, is what's the best way for people to find you? I mean, if they have questions or they want to learn more or they're hearing something that they're not hearing from whoever they're working with currently, what's the best way for them to find and chat with you or and your team?
Absolutely. Yeah, so if you want to find me, I am on LinkedIn, so Luke E. Anderson. I can tell you there's a lot of Luke Andersons out there. Or you can email me as well, luke.anderson@spwm.com. So sampaulwhiskey.com.
And then Steel Peak Wealth Management.
Steel Peak Wealth. Yep. So our website, steelpeakwealth.com, that will show our entire team, how we're structured, the ideologies, as I mentioned, kind of how we implement investment strategies as well. But yeah, appreciate you asking.
Awesome. And let me just share too, Luke and I, if we're not in this heartbeat and two more heartbeats, we will be connected on LinkedIn. And so you can always sign him as part of my network as well. And Luke, I just want to say thank you for joining me today. I think there are some serious rabbit holes we could go down and talk about. It would be a little scary.
Absolutely.
And I'm afraid we would go from, let's talk for 15 minutes to hey, it's July and we're still talking.
Right. Yes.
But I would encourage anyone listening to this, you have questions, reach out to Luke, reach out to his team. It'd be a great conversation. And correct me if I'm wrong, having a conversation doesn't cost us anything but time and attention.
Yeah,
and,
not at all.
Yeah, because as a fiduciary, you're never ethically able or inclined to put someone in a bad spot. And
right. Exactly.
I think that's one of the pluses that I wish was the predominant version of the market. So kudos to you and the team for doing that, and thank you for listening to the C-Suite Edge.